Yeah, good.
All right. So I had the week in review this week. So I'm going to start off by going over the major indexes. So last week, the NASDAQ on Friday closed down about half a point. A lot of that had to do with geopolitical tensions and um, like conflict with Syria and other more political factors. It also had to do with some bank earnings that came in positive but were brought down by the markets. The weekly gain, though, ended up being pretty high, 2.8% overall. Yesterday, Netflix fueled gains. The NASDAQ was up about 124 points at close. And then this morning, it opened up about 0.18%. And the markets did go down for a while, but they're back up now. For the S&P on Friday, due to the same political tensions, the markets did close down a little bit, but had a great weekly gain of 2%. Yesterday, tech really went through the roof, and so the S&P closed up about 28 points. And then this morning as well, they opened up in the green. And then the Dow Jones once again closed down on Friday, had a great weekly gain of 1.8%. United Healthcare's earnings yesterday fueled some gains in the Dow Jones, and they finished up 213 points, and then also opened up in the green this morning as well. So this past week has been a big week for earnings. So first I'm going to highlight the banks because they were the major companies who put out earnings this week. And I'm not going to run through every number, but the top four, every bank this week beat earnings and by quite a large margin. JP Morgan, Citibank, Bank of America, Goldman Sachs, Morgan Stanley, Wells Fargo. They all beat on EPS and revenue and profit margin. Some of them lacked a little bit in net interest income, but overall they had great performance. The bizarre thing, though, is that they actually, every bank besides Morgan Stanley, who released early this morning, finished the trading day down. So JP Morgan on Friday finished 3% down after releasing great earnings. Citibank finished down 3% on Friday as well. Bank of America finished down half a point after also releasing great earnings, as well as Goldman Sachs, who finished down yesterday after releasing great earnings. And then Morgan Stanley, like I said, released this morning, and they, last I checked, were up 1.8%. So a lot of analysts didn't really know what to think of this because they viewed these earnings as being really good. But as they kind of dove further into it, they believe that investors viewed these stocks as they viewed these earnings as being just par because they expected with the new fiscal stimulus and with all the volatility that the banks should have hit these numbers, and that really the earnings were already priced in. Now, what this kind of insinuates is that if the earnings are already priced in, it means that the market is already kind of at its peak, and so it is worrying some investors as to whether the markets are at their peak right now and whether the price levels are at the top. IBM as well yesterday.
Hold on a second. Before you move on, Dan, really good point on these bank earnings. Most of what you're seeing is a tax effect because of the new tax plan. But if you remember, I think we talked about it last week, we were expecting the banks particularly, but earnings in general to be up by 17%. And these earnings are good, but 17% is hard to hit. I was just doing a quick calculation. I think JP Morgan is the only one who came close to that. So yeah, once those expectations get elevated, you've got to jump through some pretty big hoops, even if you beat the estimates. So good point, Dan.
Yeah, I was really surprised, and I was watching Kramer the other day, and even he was kind of like, I don't know what happened. Like,
Yeah.
I thought they did great,
Yeah.
but it seems to be a trend this earnings season. So IBM as well beat their earnings per share and their revenue estimates, and this is actually their second consecutive quarter of revenue growth. The past 6 years, they've been negative. So overall, it looks on the outside like a great quarter. They did unfortunately have they missed some of their earnings on their strategic imperatives portion of the business, which focuses on social mobile analytics. And then they did have a slight decline in their guidance. So they expect a 13.8 earnings per share at the end of the year, while analysts were projecting a 13.83. So despite only missing their guidance by 3 cents, everything else is great for the most part, but they did drop 6% after hours yesterday, which I thought was a little bit overreactive, in my opinion, to what looked like a pretty great quarter for a company that has kind of been struggling a little bit lately. And then on the other side of things, you have Netflix. So Netflix came out even with its earnings per share. The revenues were just slightly above what was estimated, but they did surpass their total streaming ads by a really significant number. And then their stock was up about 6% after hours Monday, because that's when their earnings came out. And then Tuesday they closed. So yesterday they closed up 9%, which is pretty amazing, especially considering that for the quarter they also posted about a $300 million negative free cash flow. So it's just crazy to kind of look at the banks and IBM and then transition over to Netflix, a company who's really got zero cash and are expected to have negative cash flow for the next few years, yet they're going through the roof. And then Netflix also brought up stocks like Amazon and Google. So yesterday with earnings from Netflix, Amazon was up about 3.6% and Google up 3.1%. This is likely a move because Netflix uses a lot of Amazon's web services to stream their movies, and they're also shifting a little bit towards Google now. So it's kind of cool to see that when one of these FANG stocks move, the other three of them that are part of it as well move. And so my question is, would you buy Netflix? And is there anything about the company or stock that worries you?
Feel free to call on somebody, Dan.
Chaz?
Yeah, I think I would buy Net. Yeah, I would definitely buy it. I mean, I was reading the other day that they just added 2 million subscribers, U.S. subscribers, this past quarter, as long as with like 5.4 million users that are also international. So just thinking, and I also think that they said that like their whole revenue earnings, I guess, like increased by like 60%, which is like the most by any S&P 100 company there. So I mean, the amount of growth that they're basically showing, that I think that would get me somewhat excited to invest in that company, to definitely making a lot more money. So I honestly don't really see, as far as like, I think we were talking last week, as far as like with like the movie theaters and everything. And I was having a conversation yesterday, and especially as far as like with cable companies, I think they're now starting to. I think it's like an Xfinity deal they're starting to kind of like actually make within like a bundle within Netflix and Xfinity. So I guess like doing that as well would like make like more people will be watching Netflix, which will possibly bring more things in. So I think that would definitely be a good thing. I don't really see anything right now that really worries me because not a lot of people you see more people saying, I'm going to go watch Netflix rather than saying, I'm going to go watch a movie theater or I'm going to watch cable television or anything like that. So I don't really see any worry there.
Yeah, I agree. I'm with you. I believe that they're definitely a good buy. The only thing, like I said, that worries me is their negative free cash position, which, like I said, is expected to continue probably for the next 5 to 7 years, maybe even beyond, just because of how much investment they have to put into their original content. But I mean, you go on Netflix and you watch any random show that they produce, and most of them are just great. So I mean, it works out.
You know, it's interesting with Netflix. You mentioned the Xfinity thing. Xfinity. Do any of you have Xfinity service? Yeah, they've got a deal on this week with. They bundled Netflix and Showtime and HBO and I think something else, all of it for free for the week. So binge week, I think, is what they're calling it. And Netflix has done a good job of keeping its stock up. You mentioned the FANG stocks. Have you seen that they're trying to get Facebook not to be included in the FANGs because Facebook's been struggling a little bit? So Chaz is going to buy Netflix. Anybody think differently? I don't see any hands. Everybody would buy Netflix. Yeah, it's. I like, Dan, that you tied these into Amazon and Google because it's similar in that negative free cash flow. That was Amazon's position too, while they were in all that growth. And um, Netflix has a good position right now. Amazon can knock them out, I think, if they choose to do so. But at the moment, they're not choosing to do that.
And then moving towards China and some of the more political stuff, the Chinese the president has agreed to get rid of the 50-50 rule as it applies to car manufacturers. This really took me by surprise because it was something I was talking about the other day that I didn't think would ever happen after he declared himself the indefinite ruler. But it's expected to be removed by 2020. Firms expect that the tariffs of 25% might be brought down as well with the move. And what it'll do is really just kind of create a level playing field for car manufacturers, because currently car manufacturers have to create a joint venture with the local firms over there. They have to give them their technology. They've got to show them how things are done. And so it's really easy for, if you have proprietary technology or any special processes, for that to be taken and used elsewhere. And then it really just hampers down the business because they have to go out and try to find a partner to even join them. The interesting thing to watch here will be whether it actually plays out, because 4 years is a long time before this is expected to happen. And then 2, whether companies will actually take advantage of it. So this will be great for Tesla, who has been working to move their manufacturing into China, but hasn't really successfully done so yet. So they haven't had to go out. They don't have an established partner and established joint facilities or anything, but companies like GM, Toyota, GM, Ford, other companies like that, they have already established these joint ventures. They already have joint manufacturing facilities, joint workforces, and it's just years and years of stuff that would have to be unwound in order to actually separate themselves. So as much as it would likely be beneficial, I don't know whether companies will actually take advantage of it due to just the cost and difficulty of kind of separating yourself from that and reestablishing yourself as your own firm. So my question is, do you think that this move gives Trump's trade war any credibility? Anyone? Rachel?
I'm not really sure on this one.
Chaz, to get your hand up.
I think it does, because it kind of like put, some pressure on China to sort of, take some of their tariffs down. And I think I was reading the other day about, I think exactly what you were talking about. 'Cause I know like Tesla's trying to, have one of their plants put into Shanghai, and by having this would kind of like, allow like one of their biggest worries was like having like the joint venture, um, um, that joint venture problem with other companies within there, like within China. And so by having that, it'll allow them to kind of like, protect their technology and like, keep their own profits, 100% of it. But it's kind of like, that downfall that you were talking about is, they'll have to like front 100% of the cost. And, it's basically more risk and more cost for them to do that, as well as, GM has already basically kind of like established themselves already with the company, already like already in China within their manufacturers and helping them basically help them grow the way they have been. So I think, kind of like what you were saying, which I agree with, more people will probably stick with the joint venture because it's like more conservative, less risky for it. As you can, if you're like somebody like Tesla, I feel like, more risky because they're putting more investment in it, but they can also, if it actually works and they can actually kind of like get their production up. I know they've been falling really bad on production. So I feel if that does work out the way it should be working out, this trade war can actually benefit more of Tesla, but can also have more risk for them if it doesn't necessarily fall through, with them being able to produce more cars where they need to be produced. Because I know they were saying that they were down, I think like a day or so ago, because their production hasn't been able to kick up. So this could possibly benefit Tesla with Trump being able to having tough negotiations with China.
Yeah, I agree. And I think that kind of like you were saying, I think that this is a bit of a strategic move by China, because I think that it puts it in our minds that, yes, we kind of won the battle. But I think that the president understands, like both of us were saying, that it would be hard for some of these major companies to unwind their operations, to separate themselves. And so they might not want to go through that struggle. And meanwhile, it'll benefit companies like Tesla. But in the long run, it looks like a win for us on the surface. But when you dig down deep, it goes back and forth as to whether it's actually beneficial. And then kind of the other side of what's going on in China. So China this week did put a tariff of 178% on U.S. sorghum imports. So sorghum is used for livestock feed. It's a grain, and it's also used in some Chinese alcohols. China claimed that the U.S. is improperly dumping their sorghum product on China by cutting prices and leaving Chinese competitors with no real ability to compete. They've said that between 2013 and 2017, the U.S. cut sorghum prices by 13% and increased their imports 14 times. And so China is reacting by putting 178% tariff on the value of sorghum product imported while they're doing their probe. Additionally, the U.S. banned American sales to ZTE for 7 years. So ZTE is a phone manufacturing company, and the U.S. has claimed that they violated sanctions by selling phones and different goods to Iran and North Korea. So in response, the U.S. has said that ZTE cannot buy American products for the next 7 years. While this will hurt China, it will also hurt some U.S. companies. So ZTE has sells about 45 million phones a year, and 50% of those phones plus are stocked with Qualcomm chips. Um, Intel has different parts in there, as well as another American firm, um, Acacia, I think it's pronounced, who lost 36% of their market cap upon the news coming out. So um, the ban kind of goes back and forth because it will affect China, and Trump has also said that other Chinese companies that pose a risk to national security will also be banned and kind of blocked out. So it will affect China. It may make the president want to retaliate with more actions towards the U.S., such as the sorghum tariffs and other types of tariffs. They said that Trump was looking into more tariffs, and the Chinese president was also looking into more tariffs. So we'll have to look out in the coming days as to what those have to do with. But at the end of the day, this will also hurt American companies. And so it'll be interesting to see how it plays out. And then in the news a lot yesterday, Starbucks came out and said that 8,000 stores are going to close for racial bias training on May 29th. This will cost the company about $12 million. And so for those of you that don't know, Starbucks has come under fire in the recent week because two black men were arrested in Philadelphia for sitting in the store and trying to use the bathroom. It was caught on video, and it's been posted all over the news, and it's caused a lot of backlash towards Starbucks. People have been protesting Starbucks for the past 5 days, inside and outside of the stores, and they're the latest company to come under fire for racial prejudice. They're joining the likes now of companies like H&M, Old Navy, Zara, Applebee's. I mean, the list goes on. And so my question is, do you think that companies need to start investing more in educational programs for their employees? So do they need to start being more proactive and less reactive to these situations? And then in a time of racial and political divide, do you think that this will hurt Starbucks' top line?
Angie has her hand up.
All right, Angie.
As sad as it is, like, I personally think that they definitely need to start like investing more money in that, because I mean, this has been like happening very often, like in so many places, and it's really sad. And like, I mean, from somebody who works retail, like, I understand about, safety and also preventing, like, when you see someone shady, like whether it's with, like, say, your theft or, safety precautions. But at the same time, unfortunately, like, a lot of times it is a lot about like profiling, and it does come off as racist. So it's definitely good. It's better to have like education. Like when I used to work at BB, we had constant education about these particular things as well. And as for will it hurt Starbucks' top line? Personally, I don't think so, just because like Starbucks had a very fast response to it, and the CEO did apologize, and the manager that called the police, I believe, like, she's not working there anymore, and I know that they didn't say she was fired. It was more of like a mutual agreement sort of thing, so there wasn't too much comment about that. But I don't think it'll hurt just because there was such a fast response, and people kind of like get over things kind of quickly. But yeah, but they definitely need to invest more money in educational programs, which they're doing. So.
Yeah, I agree. I think that companies need to realize that, especially in a day where everything that ever happens is caught on video, and especially in a time like we're in now where there's such a divide of views and there's a lot of racial divide going on right now, that companies are just being too reactive and they're waiting to respond. They're waiting to respond to something that happens and not trying to prevent it. And that's really just kind of hurting company after company. And like you said, I don't know if it'll hurt the top line. It will be interesting to see if it does, because there is a lot of protest right now, and there are so many places that you can get coffee from that it's not the hardest thing to kind of just give up on. But I think at the end of the day, they'll probably come out all right, because for reasons like you said about them having a quick response, a good response. The CEO yesterday met with the two men. Not that that helps that much, but I mean, they're trying to show some initiative and fix the problem.
This is really important to keep in mind over time as you guys advance within organizations. You're under such push to grow the top line, and all of these kinds of trainings are costs, but think of it as insurance, and it's an investment in avoiding being the headline in a racial dispute. I mean, you just have to assume everything that you do is being recorded. Ryan L.
Also, like for a company like Starbucks and companies like that, like $12 million expense isn't that crazy for like the lawsuits that could come out of this. So I think being proactive is way more worth it than the potential expense or the potential like reputation loss from it. So I definitely think companies should start investing more money.
Also, it goes beyond just teaching an employee how to behave within the work environment. It's also an educational process that hopefully is taken outside of the work environment and shifts people's way of thinking about profiling. So the amount of good that can come out of this if it's done well, I think is quite high.
All right, so next, Tesla was in the news yesterday because they shut down their Model 3 production, and they halted it again for the second time this year. So in addition to that, SpaceX just received an additional investment of $500 million. This puts them at about a $25 billion valuation. Today, they're planning on launching the NASA TESS, which is a satellite, and it was supposed to launch on Monday, but they halted the launch and postponed it due to weather and some other factors that they said they wanted to err on the safe side for. Additionally, Musk's other company, the Boring Company, just received a $112 million investment, most of which came from Musk's pocket. This is a big investment because they do have permits to build test tunnels in California and Baltimore, and they're also a finalist in Chicago to build a new transportation system from downtown to Chicago O'Hare Airport. And so between the three companies, SpaceX is doing really well, Boring's doing very well, and then Tesla is kind of struggling right now. They're down about 16% for the past 6 months. Like I said, their Model 3 production was halted for the second time this week. Elon Musk just last night sent out a pretty colorful email to all of his contractors and production employees, citing that he wants a new goal of 6,000 cars a week by June, which I don't think is that feasible. They're also under pressure for litigation and uncertainty. And then another factor is the price of cobalt, which is essential to lithium batteries, is on the rise. And then much of these rising cobalt prices might also be affected by our, quote, trade war with China, because China, although it doesn't mine the cobalt, it refines about 80% of the cobalt. So that'll be another thing to watch with Tesla. So my question is, should Tesla investors worry about Musk's inability to devote all his time to Tesla? So when I see Musk talk, the way I see it is SpaceX is his real baby. If he had to drop one and go 100% to one, it would be SpaceX. But Tesla really needs him to be there all the time, helping them out and kind of regaining investor confidence. And so between the three companies, he's going to have to kind of pick and choose his battles. And do you think that that'll affect, or do you think it'll worry investors that he's not able to really be there all the time for Tesla in a time when the stock is struggling?
Angie's hand is up.
Angie?
Sorry, I just remembered that it was in the beginning of this class, somebody did a presentation where Elon Musk actually invested so much of his own money, so much of his own capital into Tesla to get the stock up, basically promising that like for the next like 10 years, he's there full time and that like, he's not going anywhere. Therefore, giving reassurance to, your average investor that it's going to be good. So, I don't think necessarily they should worry just because he did invest his thing, but I think that the board of directors for his company should definitely remind him of that because he did invest his own money, unless I'm delusional and I'm mixing something up.
Yeah, that was my presentation, and like that did happen. So
yeah,
I think you're right.
Okay, yeah.
You're right. Chaz's hand's up.
I think they should worry because if you're saying that right now you're only producing 2,000 a week and you say you want 6,000 by June, where are these resources going to be coming from for you to be able to do that if you're having both SpaceX and you're having the Boring Company as well? And not only that, they already have $10 billion in debt. So it's really hard to try to spread around trying to devote most of your stuff to 3 different things when 2 of them you can considerably see you're adding more time to 2 other investments rather than the one that you kind of basically that you were starting with. And then I think he was saying that he was promising investors that they would have like positive Q3 results when it's like you said that the first couple of times and now you're saying, okay, Q3 we're going to have good results now. But it's like you haven't yet proven yourself in number wise to like assure investors that necessarily will be possible. Then I had read something the other day saying that Musk was sleeping in the factory. I'm not sure how true that was, but he's literally saying that he was sleeping inside the factory for production. I guess trying to assure people to know that I'm all in. I am really trying to, I am invested in Tesla, not just financially, but my well-being of sleeping there, watching production, making sure that things are actually getting done. So for me, I don't really see, if I was an investor, I wouldn't really be too convinced that Tesla.
Well, I just want to jump in because this is like my favorite thing. So it is really clear that SpaceX and the Boring Company are like his like love children. Like he likes them more than Tesla, I think, at this point. But what Chaz was saying like is true, in that he is he's been sleeping in the Tesla like production facility the last couple of weeks. He's been in El Paso and really hasn't been dedicating any of his time to SpaceX and the Boring Company. And he's been like, I think there's been a lot of newscasters there as well, because when Tesla's struggling, it's always like, I think the news really likes to jump on it, and like they like to put it in the media or put it out there that Tesla, something might be going wrong. And while it's not going well for the Model 3 production right now, I think that he's doing pretty much everything he can as a CEO to show that he is fully invested. I mean, I think that if every struggling company had their CEO sleeping on their production floors to make sure that bottlenecks weren't happening and that, things were running a little bit more smoothly, that companies would have investors with more confidence. So I think right now his investors are probably doing fine, seeing all the effort he's been putting in the last couple of weeks. Also, his compensation package is tied to Tesla doing well. If Tesla's struggling, he's not going to get paid. He hasn't taken a paycheck from them. So I think he's definitely going to be pushing for that reason too, to get production up and running.
Yeah. I agree with all those points. And I forgot to mention, it just hit the news at about 11 last night. So in order to meet this 6,000 cars a week production by June, he plans on working the factory 24 hours a day, round the clock. He plans on hiring 400 new workers a week. He had quite the email to his workers and his production people. He called some of them about as useful as drunken sloths. And he said to his suppliers that if you can't meet our demand right now, then Tesla doesn't want to work with you. So like either meet it or you're out. And this worries me a little bit. I mean, it looks great that if he can do 6,000 a week, that's going to be great. But this is really going to cut into their cash flow, and it's going to just add to that crazy amount of cash that they constantly are burning. I know Wall Street Journal had an article a couple months ago about how Tesla burns like $8,000 a second or something crazy, and that if they can't really start obtaining a really strong cash inflow, that they're likely going to be bankrupt within 12 months kind of thing. So I think that this puts pressure on them. Will the added expenses pay off? And then additionally, like you said, Tyler, about the sleeping on the production floor and stuff, I think that shows really strong management, but it also worries me a little bit because it shows that he doesn't have strong management behind him, or that he doesn't trust the management he has in place, forcing him to be there sleeping on the floor. So I think that that shows a little bit, possibly shows that the upper management is a little weaker than it could be.
Dan, I think that's a really good point. Tesla's a great story. I'm glad, Tyler, you've gotten so engaged with this particular topic. If you remember, Tyler's exactly right. He's taken no money out of the company. And because investors were very worried that he was just going to go off and do SpaceX, remember his compensation is tied to some really aggressive goals farther out. So it keeps him at Tesla, and he's going to make a fortune if he hits the goals. Now, remember when we were talking about sustainable growth, it's not sustainable for a CEO to sleep on the factory floor. It's not sustainable to run factories 24 hours a day, because what will end up happening is that machinery breaks down, people get tired and burned out and leave the company, and so you're constantly replacing people. So there's some challenges for Tesla right now. Morgan Stanley just came out and said the next 6 months are critical, and it really could go either way for Tesla. And I think a lot of, as Tyler mentioned, a lot of the media has been in. As soon as Tesla's struggling, the media comes in. And what you heard this morning is media saying, gosh, he was so forthcoming in all of these interviews he did recently, and it's clear this isn't a planned outage. This is a bad news outage. Something's wrong with the production line. I was surprised. As you guys were talking, I checked in the market's up about less than 0.5%. Tesla's up about 3%. So I think the market reacted to his email that he sent, and most especially, well, we're going to go ahead and run 24 hours a day. That's a good stopgap measure, but it's not sustainable. So yeah, I think Morgan Stanley is right on in terms of the critical nature of the next few months for the company.
All right, and then just this morning, it came out that Amazon and Best Buy are going to form a partnership to sell Fire Edition TVs that are going to be produced by Toshiba and Insignia. So Amazon and Best Buy already partner on some level. Best Buy sells Alexa products. It sells other Amazon products, but this is a big move because I think that it really is going to give Amazon more of a brick and mortar strategy. They're now not only teaming up with Best Buy to produce these TVs, but they're also they're going to have a showroom to really show off these technologies. So they said that they don't necessarily expect everyone to buy them in store, but it's nice to have a showroom. So they expect that people will go in, look at the TVs, and then go home and buy it online. And with this as well, Insignia has said it's going to stop producing Roku TVs and only sell the Fire Edition TVs. So in my opinion, this is a pretty big move because it's kind of a win-win for both companies. Best Buy gets access to Amazon's customer base, and Amazon gets a place to show off its products. And I think that it'll not only affect other brick and mortar companies like Walmart and stuff, not largely, but a little bit. But I also think it'll affect some TV producers and companies like Roku who are now losing some of that market share. And so does anybody have any thoughts on this partnership? Do they think it's good, bad?
I think it's a good partnership. I feel like it's just Amazon kind of getting into another sector, and I know I personally like if I was purchasing a TV or something, I'd like to see it in person kind of first before I bought it online, and I'd probably do like exactly what they said, like go into the store and then check it out and then purchase it online later. So I think it's a good idea.
I think it's a good idea for Best Buy because, correct me if I'm wrong, but I don't think Best Buy's been doing too great over the past few years. So I think furthering their relationship with Amazon is a really good idea, trying to gain their customer base a little bit. And then Amazon just growing a larger customer base and having more places to sell is great for them. But I think it's a bigger deal for Best Buy and kind of furthering their partnership and saving face a little bit.
Yeah, I agree with both of those points. I think it's just Amazon sticking its hand in another market and kind of giving itself a little bit more brick and mortar, like being able to compete a little bit more on the brick and mortar level. And so I think that they're just continuing to steal market share from different areas. Now they're in the TV business. Roku's had the really good smart TVs. I know a lot of people with the Roku TVs. If I had to choose a new TV now, I'd probably go with the one that's got Alexa attached to it and Amazon. So I think that that's really going to affect some of the companies like Roku, who's been doing so great lately. I didn't look at their stock this morning, but I feel like this will probably have some effect on them. And then finally, is the bull market over? So there's been a lot of back and forth talk the past couple of days. There's been some analysts who have come out and said that we're not at our peak yet and that we've got another 3 to 5 years to run. And then there's analysts who have come out and said that the markets are about to turn down. And so just a few indicators of what I think is indicative of the end of our bull run. So Bank of America had a survey come out in which they surveyed fund managers. And in this survey, fund allocations to stocks amongst these 216 fund managers is at an 18-month low. Additionally, the amount of these portfolios that the fund managers are allocating to equities has dropped from 40%, which was its March figure, all the way down to 29%. Which is a pretty large drop and shows that these fund managers are becoming a little worrisome of the equity market. And then additionally, these managers believe that the market and earnings have either peaked or they will peak by 2019. And so these fund managers are starting to think that we're at the top and we're going to start to slowly go down from here on out. Additionally, Morgan Stanley came out yesterday talking about how their analysts are noticing investors having a preference for European stocks over US stocks right now. Additionally, Morgan Stanley believes that a lot of the strong earnings are due to the fiscal stimulus package, and these kind of fiscal stimulus packages just lead to temporary gains, and they're not sustainable gains, and so they're a bit overhyped and they look better than they are, kind of pushing the equities market up when really they believe that we reached our peak even before the stimulus package and the tax bill. And so Morgan Stanley is pretty bearish right now on the markets. And then additionally, Friday and Monday were the two lowest volume days on the New York Stock Exchange in the past couple of years. And so this low volume kind of indicates that the market's risky. Some people are saying that the low volume is just due to more investors investing in ETFs and other types of funds. But it definitely does indicate that there is some risk in that investors might not, they're not investing at the same rates that are indicative of a really strong bull market. And so do you agree that the market has peaked, or do you think that we're still in a bull market? And is the awful price action on the bank earnings indicative of more of a bearish market?
You can call on somebody.
Christian?
I wouldn't say we've peaked, but I think the mega growth is probably stopped for the time being. When we come from 16,000 to around 25,000 in the Dow in just a short period of time, I think that was a correction of the 6-7 years of stagnant growth we had. Obama referred to as the new normal. But yeah, I think that was just a big correction. I think the big growth has stopped for now, but I wouldn't say we've reached a total peak, no.
Anybody else? How about you, Dr. Leggio?
That's a good question. I don't think we're heading into a recession, but I think a lot of what's propping up the market right now are stock buybacks, and that's sort of artificial stock increases in price. Earnings have been solid, and so I see the economy as pretty solid, but I think we're going to see some more manipulation of the market, inflation rates, interest rates. So there's going to be enough activity that will sort of contain growth going forward. I don't think we're at an artificial peak, but I do think the market growth is going to slow down. What do you think, Dan?
I don't know. I go back and forth. I know we talked about it earlier and how the bank's earnings were a little bit priced in and stuff. But I mean, I was shocked when I was looking at their earnings reports that were just like great. And I understand that a lot of it's kind of temporary gains, all that volatility. Obviously, they're going to have some propped up gains and with the stimulus. But I mean, I wouldn't think that it'd warrant the kind of losses they had on their stock. And then even like we were talking about IBM today, I think that the market is just really reactive right now, either positively or negatively. It's not like a little reaction. IBM dropped 6% after hours. The bank stocks are down, but then you have the FANG stocks that are kind of just blowing through the roof without any real backing. I mean, Netflix is I think their PE yesterday they said is 216 or something. So they're trading way, way, way above earnings on decent earnings per share, decent revenue growth, nothing crazy. So I think it's really reactive right now, and I know a lot of the Bank of America survey really caught my eye as to how these fund managers, who I think it said have about $700 billion worth of assets under management, how it seems like they're a bit worrisome of the equity market right now, and that they think that the economy is going to start to slow. So I don't necessarily think we're at a peak, but I think we're at kind of a weird point where investors are kind of starting to wonder whether we are or whether we're not.
I think we all agree.
And then just what to watch for. Google comes out with its earnings on the 23rd. Twitter comes out with its earnings on the 25th. That'll be pretty big to watch. Twitter had quite the day yesterday. I didn't see what they finished at. I think it was 11% was last I saw they were up. And it was due to a Morgan Stanley analyst coming out and upgrading the stock. And then at close yesterday, based on the options market, their implied move on their earnings is expected to be about 14%. So there's possibility that stock's really going to move on earnings day, depending on what comes out. And so we'll wait and see for that. Apple's earnings come out on the 1st. I think that'll be interesting to see, with Spotify now being public and everything. Apple's real moneymaker these days is a lot in its music and its streaming service. So their revenue is starting to come more from services than it is products. And it'll be interesting to see how companies like Spotify and whatnot are affecting their market share in that space. Tesla's earnings come out on the 2nd. Like Chaz was saying, it'll be interesting to watch and see where those land and what kind of position they're in, especially with all the news surrounding them. Another thing to watch, the NTSB is investigating Southwest's crash right now. And there was some news this morning that it could have been something that was overlooked in the maintenance area. And so if it does turn out to be on Southwest's, if it does turn out to be Southwest's fault and they overlooked some maintenance issue, it'll be interesting to see how their stock fares. We'll have to watch how the trade war goes and see where that takes us.
Dan, before you move on for Southwest Airlines, did I see this morning that they had another engine blew recently as well, about the same age plane?
They hit a flock of birds and blew out an engine and had to do another emergency landing.
Okay,
I don't think it was
related last time. Okay, because
Yeah.
they said this one was inspected 3 days before. Yeah, they're up pretty nicely at the moment. Okay, so it hasn't negative reacted them. The market's not reacting negatively to them at the moment.
Yeah, so I think it'll just be interesting to see what the NTSB finds and what is actually the root cause of it. Additionally, we'll want to keep our eyes on the trade war, see where that goes. There's been a lot of activity lately, a lot more threats going back and forth, but there have been some good things like the 50-50 rule being taken away. It'll be interesting to watch how the Syria tensions and oil prices fare. Oil futures, I think, hit 68 this morning due to U.S. oil reserves being downgraded, and tensions with Syria have affected that as well. One analyst said that he wouldn't be surprised if oil futures hit 100 in the coming months. And then just how it'll be interesting to watch how the market reacts to the rest of the earnings season, how bullish or bearish they'll be on the different companies, and whether the stocks will continue to go down, some of them on earnings beats, or whether they'll go up, or really what will happen and how reactive the market will be. And that is it. I can't hear you.
Thank you. I'm sorry about that. Anybody have anything else they want to talk about the markets? Really nice.
Well, I did see something about I think it was talking about like the Indiana farm. I think it was 200 million eggs basically had to be recalled.
Great point. Yeah,
So
and I know
yeah.
Walmart was included in there. I'm not sure what other places were, but it was salmonella, right?
Yes.
Yeah.
So I think I might have to throw my eggs away now. I'm not trying to get sick.
Thank goodness it happened this week instead of the week before Easter. Can you imagine what that would have done to Easter egg decorating that week? So, yeah, not a good sign. And I think it's 3 different farms that all have the issue. Not good. Anybody see anything else that was interesting? Okay. Sorry, I didn't even greet you today. I was such a mess. I was trying to improve my ability to see all of you, and I plugged in another monitor so that I could put your pictures over to the side. I could look at all of you while I was talking, and that threw things off. So when I closed up my laptop, it had an update overnight that wasn't fully done, so that messed up my laptop. So sorry that we got a little bit of a late start here today. We are going to do a couple of problems to finish up Chapter 13. Once we finish 13, we're going to go back and talk about Chapter 10 just a tiny bit, and that's all I have planned for the day. So that should take us through most of the day. Before we start talking problems, did anybody have any questions about the project? I'm going to send you a note later today because for some reason, every time I hyperlinked the video, the hyperlink caused the entire link to disappear. So I sent it a couple of times, but I also included it I rewrote the project description. If you pull that off the internet, you're going to get the correct video. Don't you look at the video that tells you how to do this in R unless you already know how to use R. It's much more complex than doing it in Excel. So I'll send it to you again after class, but it's in the correct video is in the project description now. So if you pull it from there and follow that link, you'll be fine. Any questions about project to do next week? And then next week we're going to finish up chapter 14 and 16, which sounds like a lot, but it's a quick overview of those 2 chapters and then review for the final. And we are wrapping it up here pretty quickly. You guys are going to graduate before you know it. Let's break up into groups and take a look at problem 11 at the end of chapter 13. And I saw that Emily and Connor are in the same spot. Is anybody else in a room with anybody else today?
Me and Chris are in the same room.
Who's me?
Alexa.
Oh, Alexa and Chris. Okay. Anybody else? Okay, I'll make sure I put you guys in the same spot so that. Okay, let's see. So we need Alexa and Chris. Sorry, it takes a little bit longer when I do them manually. And Emily and Connor. Oh, it's not showing Connor on there. There we go. Okay, so you guys are assigned in the first room. It's coming. Sorry, y'all. Okay, your room should be open now. Come on back in here when you guys are done.